Abby, very good to see you. We start with a big question. Should retirees include Bitcoin in their retirement portfolio? Fidelity recently published this white paper titled The Case for Bitcoin. So I want to talk through that paper, considering Bitcoin is now trading around 97,000 off of
Mhm.
its very recent high of 108,000. Of course, by the time people are watching this, it's going to be different from what it is right now.
Right.
But let's talk through the numbers because Fidelity really did a deep dive. So take a look here. This says that a 2% allocation to Bitcoin could allow for an increase in annual spending ranging from 1 to 4% and potential losses of up to negative 1% in a worst case scenario. And a 5% Bitcoin allocation could allow for an increase in annual spending by as much as 9.5% for older investors, but with much steeper potential losses of up to 3% in a worst case scenario. So I know that's a lot of numbers to throw at you, but do you think that retirees or pre-retirees should be including Bitcoin in their portfolio right now?
I think this is a very good way to frame the effect or what's in it for me
Yeah.
for a retiree. And for a very long time, retiree and Bitcoin were almost opposites. You know, we wouldn't even fathom any kind of the Bitcoin allocation for a retiree. It was too unknown, too risky. It was a little bit hard to invest in until things have gotten regulated and a little bit easier. And now it's really on the table for some people. And what we like to educate people on is if you are uncomfortable with Bitcoin, you don't, it just makes you uncomfortable just thinking about it. You don't have to explore
Yeah.
this as an option. It's not compulsory. It doesn't need to be part of everybody's core portfolio. But if you are intrigued by it, then it's something that you can absolutely take a look at. And I do like how they framed, well, how would this affect the income that a retiree could get with a fairly small allocation. So in this paper, it shows 2%. This one is a 5% allocation. And it looks at two different scenarios. So a positive scenario and a worst case scenario. In this situation, a worst case scenario in this study is if Bitcoin went to zero. And so what we want to really tell people is don't put anything in crypto that you would not be comfortable potentially losing all of,
Right.
because that's probably won't happen, but it is certainly a potential. It's a new-ish, it's emerging. It's of course picked up steam recently, but it's more of a little bit of a gamble. So that's why 2% to 5% is what we're looking at in this study. And what the study has found by Fidelity is that a 2% allocation, it has a pretty high upside. So right here's the chart here. We're going to look at the 65-year-old retiree. 2% allocation could, in a positive scenario, increase spending for a retiree anywhere from 1 to 4%. And the worst case scenario, potential losses in income of 1%, is pretty palatable for a lot of people. And so that 2% allocation is what, if my clients are wanting to explore maybe some cryptocurrency, Bitcoin, something like that, a 2% allocation is what I would be comfortable recommending to them. Maybe not even that much at first, maybe kind of dipping the toe in and exploring it. But, like I mentioned before, it's not a must or a have to. It's an option that's now on the table because there's been so many advances in the crypto and the Bitcoin world.
Right. Real quick, sorry for my coughs. I thought I had muted my mic. I didn't. So, cold season right now. But I also want to remind everybody watching that we are going to link to this white paper so that they can read it at their own leisure because there's a lot of information in there.
Sure.
Abby, you did touch on how to invest in Bitcoin. And of course, you used to have to own it in a brokerage, but recently spot ETFs were offered. Is that a better way to own it since it's a little bit more diversified? Am I spreading out my risk a little bit more?
Yeah, absolutely. So it's also easier and it's more accessible for investors that don't want to go and figure out how to work with the exchange, like a Coinbase or something like that. And for people that want to hold or have exposure to Bitcoin or other cryptocurrencies in their retirement accounts. So it used to be that this was not allowed. You were not able to have any kind of crypto Bitcoin exposure in IRAs, Roth IRAs. 401ks are still really off the table. I don't know if that will ever happen, but if you have an IRA, Roth IRA, SEP IRA, something like that, then you can have exposure to Bitcoin or other cryptocurrency using these spot ETFs. And basically what that does is it gives you just like a gold spot ETF. So it's very similar. It gives you exposure to that. It gives you the kind of the link to it without actually having to own, a coin or a half of a coin or whatever. And then there's a manager of that. So it is more accessible. It's a little bit safer than using an exchange of some kind. And it allows you the opportunity to hold in different types of accounts, which is great. And that could really continue to drive, and it actually has, the price of Bitcoin and other cryptocurrency. Because if we think about how much money is in retirement accounts, and now that money can go and be invested in crypto, that's huge. And that has really shown, that happened this year. The spot ETFs have became available.
Right.
And that has been kind of a fire under Bitcoin, as well as some other things too.
Right. Yeah. I think it was back in April, maybe, when they offered that. But of course, as we take a look at just the 1-year trajectory of Bitcoin, Abby, you mentioned, of course, yes, it's volatile and we can see that. But one of the reasons it's so high right now is because of the election of President Trump. So why do you think that is? And should it influence whether we are investing in Bitcoin?
Yeah, it absolutely flew after the election results came in. And that was something that was potentially expected. So Trump and his, what we think will be his administration, the people that he's putting forth for various roles, are very crypto friendly. So they are not skeptics for the most part. They are kind of champions of Bitcoin and crypto. Elon Musk, who he's obviously linked up with, among other people, pals that he has, and himself. He is much more, I would say, open-minded to crypto. He's a businessman, so he's looking at this as a potential investment opportunity for the country. He's talking about creating basically a stockpile of crypto assets for the United States balance sheet. And something that has kind of been a little bit confusing, because that's something that no one has really even ever brought to the table before. But we have, I believe it's $20 billion in seized crypto assets in the United States. Typically what happens with that is they're sold off, because as a country, we didn't really know what to do with those. So we sold them off and used the money for whatever. But what he's proposing is using that as a part of our balance sheet and potentially to pay off some of the debt in the United States. Now, there's big risks that come with that too. I mean, it's a very volatile asset. So if that's on our balance sheet and it goes down, 70% or something like that there's some risks there. But the momentum is definitely in favor of crypto. We've seen the results of that. Probably going to continue to see that, next year, once the inauguration comes in, and once the ideas that he and his administration have talked about start to, the wheels start turning on those. There's a lot of momentum. But again, it is a very volatile asset. I mean, it's down 9% since, I believe, December 5th. And that's typical for Bitcoin. So if you're not comfortable with even a small percentage of your portfolio basically doing a roller coaster ride, then it's not for you, and that's okay too.
Right. So how should investors evaluate the role of Bitcoin in terms of diversification, risk management, and alignment with their long-term financial goals? Just bringing it back to what we were talking about in the beginning, Abby, which is retirement planning generally comes down to income planning in a lot of ways. And if this is about generating income, I think that a lot of people think it should be worth a consideration, right?
Yes, I agree. It is worth having a conversation about. Hopefully you have an advisor that is pretty knowledgeable in this area and that can just start with education. So more and more people are becoming open-minded to it, and they're understanding the technology behind it and its applications. But as far as the role that Bitcoin or crypto in general can have in a retiree's portfolio, it can be a diversifier. So like gold in a portfolio, it can have some non-correlation to different stocks in different parts of the market, which is certainly a positive. It has a limited supply. So without going into exactly how Bitcoin and other crypto works, there's a limited supply. So just like gold, there's not an infinite amount of gold, there's not an infinite amount of Bitcoin either. So as that supply becomes less and less over the next however many years, that is just by virtue of supply and demand going to continue, most likely to increase the value of the different Bitcoins. So there's some intrinsic value there. And then it does have some pretty good upside potential as far as increasing retiree spending. And if you are able, if in your income plan, you're able to, if you do a 2% allocation, if you're okay and able to risk in a complete worst case scenario where the 2% goes to zero, a 1% decrease in your annual income, and you like the idea of, my income could go up by even 4%, I'm willing to take that risk. That's within my risk tolerance. That's within my income plan and my portfolio's risk capacity. I'm able to take that on, and I like the upside. That's what I would recommend. The 5% allocation has a much higher downside potential. So that might be outside of a lot of retirees' risk comfort level. So I would start with a 2% allocation. If you do dip your toe into it, make sure you're working with someone. You can reach out to us. We're able to help people through that when it's appropriate and only when it's appropriate. But it's definitely worth a discussion. And even if you decide that it's not for you, just understanding it, maybe it's for you in a year or two, or maybe it's never for you. But I think that a lot of people will feel a lot better if they just understand kind of the role it can play, and that it could have a place in a retiree portfolio, and also for younger people. I think it's absolutely worth the risk, just having even a small allocation, because the upside potential is so high.
Yeah, we have a long time horizon. Abby, I'm really glad we got to do a deep dive on this. And again, we will link to that white paper. But if somebody has questions, how can they get a hold of you?
You can always give us a call at 678-442-0255. Let us know what's on your mind, what you'd like to talk to us about. Or you can visit our website, 𝘀𝗃𝗲𝗰.com. We have a lot of great resources on there. We have blog posts about Bitcoin, crypto. We have a lot of videos that we've done with you, Erin, of course. You can also send us a message. Let us know what's on your mind, and we'll reach out to you and schedule just a 15-minute phone call to talk to you about what you need some help with and how we could potentially help you out.
Great. Abby, thank you.
Thank you, Erin.